Welcome to Business Line's State of the Economy podcast, where you'll find insight, analysis, and the story behind the numbers.
Hello, and welcome to Business Line's State of the Economy podcast series. This is the 11th of the podcast, focusing exclusively on the markets, and this series is coming to you regularly every month. Bringing insights from market experts is your host, Parvatha Vardhini. I am the editor of bl.portfolio, Business Line's Sunday feature on investments and personal finance. The expert speaker for this month is Mr. Varun Saboo, Head Equities, Anand Rathi Shares and Stockbrokers. Varun is an MBA and has been in the Indian equity industry for about 17 years. Prior to joining Anand Rathi, he has worked with Citigroup, IDFC Securities, BNK Securities, and Prabhudas Lilladher. Hello, Varun. Welcome to the podcast.
Yeah, hi. Thank you so much for inviting me on your show.
Yeah, great to have you. We are eager to listen to your market views as well.
It's our pleasure.
Sure. Varun, so, last month we were, assuming something very different when it came to the election results. So, now we are sitting at a juncture where something which was not so expected probably has happened. Markets did have a knee-jerk reaction on results day. Now, what has changed about the way you're looking at the markets post the elections, and what are you telling your clients?
So I'll make it a little funny for you first to, begin with. So, there's an old saying that people change after marriage, right? So it's not that people change after marriage. It's just the expectations which come along with the marriage. Everyone starts seeing you with a different eye. So what happened during these elections was that there was a lot of expectation which got built. Everyone was talking about a number upwards of 350, right? No one was talking about anything below 350. It was like, it's impossible to even believe if anything below that can come, right? So the severe reaction which you saw post the elections. So we had exit polls which showed that 350 plus number, market zoomed up. The next day it didn't turn out to be that. It was like severe disappointment. It was seeming as if the world is coming to an end, etc. And the way markets were crashing, right? 2,000 points, Nifty falling, and it was a free fall that day, which was surprising to me, honestly, because I understand that there is something known as expectation and market reacts on expectations. But one has to understand that this is a government which is coming third time in a row, right? And there's a huge incumbency. I don't know if you go and check in history, you'll hardly find examples where the same government, same prime minister, same leader, at least in the larger nations, comes back for third consecutive term. I have not seen too many of those occasions. So we are seeing a government which is coming with a 240 plus seats majority on their own in a 272 count, which is not that small. It's a pretty large number with an incumbency fact. So one thing which market recognized after that panic which happened after everything settling down, that, okay, it's not that weak a coalition. It's a pretty decently strong coalition. Obviously, it's a coalition government, which led to a little bit of panic. But it's a strong coalition. So it's not that India hasn't seen coalition governments in the past. We've seen successful coalition governments in the past. Right. I remember when prior to BJP coming into power, when Congress had come during that time, their seats were lower. And still at that time, people called it a very strong coalition government. Why? Because expectations weren't there that time. This time, the thing which spoiled the mood a bit was expectations. I think all that is settled. We are back to normal. Things are moving the way it should be moving. And we are having a big continuity thing. In life, continuity is a great thing. When we evaluate companies, when we go to the micro level, when we see companies, we like to see the continuity in management, that how it's going to be, right? And that's a very important criteria for us.
Okay, so you're saying nothing much has changed. That's what your view is, you're saying. So continuity.
Okay. Absolutely. Nothing much has changed. Obviously, pure majority would have been much better. But it's good, I mean, there should always be a balance. If there is a balance with this also happening, it's not a bad outcome because they have a very big share in the coalition. 240 seats is a very good number, right? So it's not that they cannot do what they want to in terms of policies, in terms of thoughts which they had, etc. It's just that they will have to do a little more extra, which is even better. If you would have seen a lot of articles I keep reading about, started talking about social schemes will be there, some welfare schemes will come, etc., which is not bad. If in addition to the amount of infra work which is happening in the country, if you see some social schemes also coming, which might benefit people at large, can be very good. If there can be something which they do on the taxation part for the middle class, which you hardly see that too much benefit comes. If that something happens on that front, it's very good if something of that type comes.
Okay.
There is some GST cuts we see in some consumer products to induce demand, etc. It's a good thing at the end of the day. So yeah, I mean, we are in a happy situation. It's a good balance which has got created, and things are looking very optimistic to me.
Yeah. So market has been touching new highs, obviously, after that. Now, how do you see the valuations currently? Would you call it fairly valued or expensive? I'm sure you're not calling it cheap, like most people are not calling it cheap. And do you expect the valuation premium for India to continue, number one, and for mid and small caps to also continue?
I am sorry, but I'll change the sentence which you just said. I am calling our markets cheap. For
Oh,
me,
really? Huh.
you have to understand how valuations have to be seen, right? When I had come in this industry about 18 years, 19 years back, I remember that time consumer stocks used to be at 10, 12 times. And my consumer analyst that time used to say that, lever is looking like a great pick. It should be at 15 times. When it went to 15 times, he said it looks great at 18 times. And over the period of my career, I've seen lever trading at 70 times also, and now at 40, 45 times, and it depends when people like it and they don't like it, right? So what is the important part in the valuation matrix? The important part in the valuation matrix is the growth, be it revenue or the earnings growth, right? I don't think so any country in the world right now has the kind of growth we have. Today our country is at 7.5-8% GDP growth, right? If you take it nominal, it goes to 15, 16, 17%. Now, what multiple do you assign? Nowadays, if you see companies which are showing very strong growth, they're trading at 100 times also. Why are they trading there? Because if a company is giving you 40% plus growth, that means a peg of 2.5 times is what the industry is ascribing. So why will that 2.5 times not be ascribed to a country like India, where multiples are still looking so cheap? I mean, if we suddenly give a 2.5 times to 15%, the growth which we see, just imagine the multiple where it should go. So I'm not saying that we'll give that multiple to it, but still, it's not expensive at all. And one has to also recognize another factor into it. So this I was talking more from the fundamental side. You're seeing great nation building happening. All companies doing exceptionally well. Entrepreneurship at a different level. The peak has gone up, right? All those things are in place. Second aspect in the entire theme is look at the way liquidity is today. Liquidity, if we see, has been so strong. I mean, today only mutual fund inflows per month is about 22,000 crores, right? By SIP. I'm not talking about the lump sum flows which come. I'm not talking about the AIF, PMSs, family offices, which are growing like crazy right now. I mean, then you have this entire PF where 15% of the overall PF every year gets added on, right? So that is a very large number. We see annuity insurance flows, which is there, which is again another number which we talk about. So there's so much that the kind of strength of the flows which we have. I think we need to factor that also in the PE multiples. Flow is a very, very important factor, which I don't think so anyone does.
So since you spoke a lot on flows, I did have a question. Given the kind of flows that's been happening, do you feel that the universe of investable stocks in India is small and you would, like it to be more expanded?
It's already expanding. You look at the number of issuances which are coming up, the IPOs, the amount of QIPs, the amount of promoters selling their some stake, which we're hearing across companies happening now. That is increasing the float overall in the market. So that's helping a bit right now. But yes, somewhere it will also kind of stagnate, right? It cannot keep coming. The number of issuances cannot keep coming. We'll see when it continues. The point is that definitely the amount of flows which are coming is outpacing the supply which is there of stocks which one can buy. And that's why you're seeing, despite the kind of selling by FIIs, markets are not stopping, because this is getting, so companies' float is going on, getting absorbed. And that's where you're seeing companies kind of being very stable to moving up. So yeah, I think we are going to keep seeing supply of stocks for some time. But beyond a point, what you're saying might turn out to be true. And that's why my bullishness even the more. That's why I'm saying that multiple has to factor the element of liquidity also, which right now no one is thinking about.
Okay. Now, you did say that, at a broader level, the markets, you did indicate that probably we are not in a bubble, but would you agree that at least there are some sectors where, stocks have run up too sharply and valuation multiples have expanded too sharply, and there could be a bubble in some spaces? I'm not naming the spaces, but you could if you...
I see. Honestly, I am not saying that there's any bubble in any sector. Okay, I don't think so. There's any bubble anywhere. But yes, we can say that there are some stocks which have gone in a range where they are richly valued right now. The bigger thing here is that what happens is if a stock rallies so much and if the run up has been so sharp, they go through a time correction. Say for the next 12, 18 months, these stocks might not move anywhere. And what happens suddenly, because of the 15-20% earnings compounding, which they keep seeing every year, where earnings keeps moving up, you suddenly start seeing after 1.5, 2 years that, okay, these stocks are again looking attractive. Because their earnings has moved up, right? And the stock prices have been there only. So your multiples again start looking reasonable. I don't see a correction which could be very severe here. But yes, I think there are some spaces. This four-wheelers is one space where I think the rally has been a little sharper. Probably things could halt here for a while. One of the stocks out of them could still outperform, but overall, I think four-wheelers has rallied a little more than what one would think.
What about PSU engineering capital goods?
Yes, so I was coming next to the capital goods space itself. So capital goods, again, engineering capital goods, we also believe that they have rallied ahead of time, or they have rallied too much. I mean, obviously, there's been a very, very sharp rally, and all of these companies, ABB, Cummins, Siemens, etc., have got to a valuation zone where to justify them from there gets very difficult. Even if I have to assume a 30% plus earnings CAGR for them, and if I assign it 2.5 peg, which is at peak, which I can give to any company, still it goes to 75 times earnings, 75 times. And I think Siemens and ABB are in that zone. So there's not much upside, much room for error, which remains there. It's just that their order books are so strong that people are still very excited about the future, right? But I think, yeah, they might also go through some time correction. PSUs, I would not agree, because there are still some PSUs which have some value. Are they cheap the way they used to be 2 years back? No, they are not. Are they in a zone from where they can still give you a decent enough return, 25-30% kind of return? Yes, they can. So the difference is just that. Now, it's not that you have any PSU which can double, triple from here, right? But yeah, they can give you still a 20-25% kind of return. For example, Coal India, still after everything, the kind of dividend yield it has, and one of the best assets which you can have in the country, is still available at less than 5 times earnings. It's still not that expensive after the run-up, right, that we have seen. So there are certain companies which are still okay to look at in the PSU space. But yes, I think four-wheelers and cap goods, I think the rally can probably halt. They can go through some time correction, and then we again see them after, say, 12 months to 18 months, where again earnings catches up and they look a little better.
Okay. Now, we recently did a story. We took the BSE All Cap Index, and then we were looking at how many stocks in this index is actually at all-time highs.
Right.
And, it's not that, say if market is touching all-time highs now and then, it doesn't mean that all stocks are close to all-time highs. So the participation may not be as broad-based as we assume it to be. So that way, where are you seeing the opportunities? Where are, these good pockets left for investing?
Opportunity lies in the IT index today. I'm surprised the way IT is struggling right now. If you see, IT index has done nothing for the last 2 years at least. So I'll give you a perspective. Nifty 500 index, in my view, has given a return of somewhere around 68-69% in the last couple of years. Okay. In the same time, Nifty IT index has given a return of only 25% odd. right? So we are seeing a 40% underperformance to Nifty 500, where I'm assuming all sectors, etc., come into it, right? Despite that, one particular sector which throws so much cash, there's so much, these are great businesses that are built over time, and that is the kind of underperformance you're seeing. Okay, I mean, we saw craziness happening in IT about 2-3 years back, right? When we saw multiples of mid-cap IT companies shooting up to 40 times and even above, right? All of these persistent, LTIMs, etc. They had rallied so much that time. This is the time when you have to buy them now, when they're available at 25 times earnings. And right now, no one is looking at them. This is absolutely a space which is looking so attractive to me, where you don't need to apply anything in your brain, because at the end of the day, US rate cuts is bound to happen. It happens today, 3 months, 6 months, impossible to time. Their economy ordering will start. Already in the last quarter, we heard from companies about huge pent up in BFSI, etc., being there. So that all will start playing over. So I think these are great. That is one space where clearly there's some value which one can have a look at. Apart from that, I think banking still has certain room. There are certain banking stocks which are still looking pretty attractive in terms of valuations, right? Obviously, right now, for whatever reasons that are there, that people are not looking at them very aggressively. There are pockets of value available which people can look at. If you go to the small cap, mid cap space, there'll be many names which will keep coming out. It's just that one has to really spend time and look for value. I think tire space is looking very nice to me. There is much more sanity which has come in tire in terms of EBITDA. The volatility which used to be and which is not there anymore. Thanks to the anti-dumping which had been put on certain specific tires, where these tire companies benefit a lot. So I think there's a lot of value there, which one should look at.
Yeah. So that way, you did mention some sectors that were overheated and some sectors where you're finding value. So do you see a sector rotation happening post the elections, especially? Until the elections, what themes drove 2023 were the themes which were continuing to drive 2024. But then are you seeing a shift post the elections?
See, we saw a little bit of shift which happened post-elections, where we saw consumer names suddenly shooting up, FMCG names, I mean, and then there was discretionary rally also, which we saw when the heat wave was on, etc. So we saw some shift happening, but can we really say that people are selling left, right, and center into the earlier names and coming here? No. Probably the new money is chasing these sectors which hadn't rallied, and where there is hope that the government might do something more, particularly around the consumer names. So I think there was some bit of excitement we were seeing in consumer names, which also post, things settling down in terms of, the thought of people that there's any concern around the majority which they have achieved has also got settled. So you saw these stocks also cooling down. But I think there was little bit of change. Not that narrative has changed too much so far. But if sector rotation has to happen, it will happen dramatically in ID. People will move into ID, is what I think.
Okay. And, Q4 results, we are beginning to see profits normalize after being abnormally high, probably in the last 2-3 quarters. Now, which means that, the top line has to start doing its work from FY25 onwards. So now, what do you expect on the demand front? How do you expect demand to shape up?
See, it depends on what sector are we talking about. I don't think so it was broad-based where things slowed down. So number one, what happened was also the entire election thing was in play. So people were waiting out. They were waiting out to see how things pan out, etc. Now with clarity emerging, with things settling down, everything back to normal, you will see again that coming back. So it's not that demand slowed anywhere, right? It's just that demand has found newer pockets. Now, are we seeing across the country demand in everything? No, we are not. So where are we seeing demand? We're seeing demand in aspirational stuff. You meet companies, they say, okay, my most premium end stuff sells the most. Okay, and this is across sector I'm talking about. I mean, wherever you go, the biggest theme is premiumization. People want to buy the best in whatever offering you have. So that's the change which we have seen. Premium stuff is selling. I think that is going to remain the theme going forward. where brands, premium brands, etc., will keep gaining a lot of prominence. So that's why you will see these retail companies also doing very well, right? When it comes to that, that's why you will see amongst, and we're already seeing amongst ACs, Blue Star is doing so well, right? So it's clearly visible when you see. I mean, when our team had gone across India, we had done a very extensive exercise from our team. We traveled 8,000 plus kilometers on the ground. 25 people had gone, 13 teams across India. Most of the dealers we met, particularly of Maruti, they mentioned that what sells in our dealership is at least a 15 lakh rupee plus car, the most. And that I'm talking about tier 3, tier 4 towns. Just see the change. Where it was always the entry level segment cars which used to sell before, right? So this is clearly visible that the pocket of growth has changed into aspirational stuff, and that will keep showing going forward.
Yeah, so that is what we have been talking about, like, a K-shaped recovery, isn't it? So
Absolutely.
so you expect that to continue. Is that what you're saying?
I mean, it's going to be clearly premium stuff which is going to sell in your country. So which is a good outcome, to be honest. I don't see that suddenly people will start consuming staples more. Yeah, but in staples, they might consume something premium more, where there's some interesting offering there, where people will be happier to spend more, is what they will. And that will always be the case. So, earlier times were there when premium stuff used to sell less, but the fast moving stuff used to sell more, right? That has changed a bit. But K-shaped recovery is there and will remain.
Okay. So that way, what is your expectation on the rural demand? So if more of rural demand picks up, you expect the staples to show better growth? I mean, is that a possibility?
See, I'll tell you, rural demand never slowed. It's just that we were hearing more of staple companies because staples was not seeing demand. That was where the challenge was. Till date, I keep explaining and talking to all my clients, and I keep talking about this only, that it was never that rural demand slowed. And it's not that they are earning less. They're earning pretty well. Things are pretty good on the ground. It's just that what they're consuming is what we are not hearing about. No, we're not talking about. Now, where is this sudden demand for ACs coming? Are you seeing the kind of AC sales? It's coming from tier 3, tier 4, right? It's not coming from the urban markets, which we're seeing. So it is coming from there. That means they have the money. That means they have the power to spend, right? So this trend will continue. I don't see a change there. Again, when we're talking about that, there might be an element of a little bit of more. There's an expectation of a little bit of more welfare schemes which might come. That will help even the more, in this demand to keep sustaining and keep being there.
Okay.
Aspirations, once they have changed, I mean, on the ground, if you go and talk to people, it's changed dramatically. So, yeah, I think premium and the spending will continue.
Okay. Thank you so much for your time, Varun. I'm sure the listeners would really enjoy this podcast, and also they do have a lot of takeaways from it. Yeah.
Thank you so much for inviting. Love talking to them. So, yeah, thanks.
Yeah. Thank you so much.